If you've been nervous about taking the plunge and buying your first home because you want to know what the property market will do in the future, well, this episode's for you. We're getting out our crystal balls to reveal the top 11 things that we know will happen.
Welcome to Your First Home Buyer Guide, the podcast for first home buyers who want to move it along and become homeowners. But most importantly, it is for you to become an educated home buyer.
I'm Meighan and that was Veronica. We're both buyer's agents and probably old enough to be your mum. But it's a good thing because between us we've got over 45 years experience to share with you and bucket loads of stories about avoidable mistakes. Together, we're going to make sure you get unbiased and real information you can rely on. Allow us to guide you on your home buying journey. We want you to become an educated home buyer so that you can stop looking for your first home and actually become a proud homeowner.
We've got loads of great tips for you in this episode, and if you'd like more useful tools, head over to the website homebuyeracademy.com.au, and there you'll get access to our free mini course, How to Price a Property Like a Professional. You will also find the holy grail of home buying education, Your First Home Buyer Guide, the online course for people who want to become educated home buyers. We created this for you to help you get on the right path to home ownership for your first home and beyond.
But before we get into the interesting stuff in this week's episode, we've got the boring bit, the disclaimer. You of course know that nothing in this podcast is to be taken as personal advice. We always recommend getting the advice of an expert in their field who takes the time to understand your personal situation. We've done our very best to ensure that the content is correct at the time of recording. Things change rapidly, so always check with the relevant government authority and your trusted advisors to get the most up-to-date information.
Now, wouldn't it be great if we had a crystal ball, if we could just gaze into the future and predict exactly what the property market is going to do? It'd make us feel a lot more confident about spending
I
a lot
want
of
that
money.
crystal ball so that I can talk to some of those, people that do predictions and go, 85% chance you're wrong.
Yeah, I know, and you don't. But anyway, we are going to talk about what we do know about what's going to happen in the property market. And to give you a bit more confidence, I guess, let's see. But before we get into that, what is your special house in the video behind you this week, Meighan? It looks rather...
Looks like I haven't made my bed, doesn't it? Looks like I'm staying in a hotel. What I Googled was smallest apartment in the world. And this is what came up. Don't know if you can see, but on one side there is the bed that's right up against a wall, 3 walls and a window. It's wedged. But at least you don't have to crawl over the bed to get into it. And then at the end there is a little kitchen. It even has a pull-out dishwasher. We're guessing this door on my left, I think it would be
one
for
of
you.
your shoulders.
That shoulder there. We're guessing that's where the bathroom is and the entry is on the other side. 14 square metres. Strongly recommend that you don't buy it.
Yeah. I've been in 22 square metre apartments. I'm not sure I've been anything less than 20. I've been in a caravan, though. Less for.
That's
all right. So, a crystal ball to help us predict the future of the property market. How good would that be? It would be amazing. But let's get this straight up front, right? We don't know exactly what's going to happen. And honestly, if anybody tells you they do, ignore them. There are some things we do know, though, but anybody who says to you they know exactly what's going to happen in the property market is full of BS, and I don't care how much AI they're using.
Yes, and that's probably going to make it even more BS. That's right. However, there are some patterns and some fundamental truths about property that we can be pretty confident about. And how they will play out. So that's what we're going to dive in today. Look at the history, look at some data, some good old human behaviour, and that's going to help us know what's coming up next in the market. Now, number 1 in the list of things that we know will happen.
Okay, you're going to love this one. Prices will go up more than they fall.
Yeah.
Right? Now, this is an aggregate. Let me explain what I mean by that. So this is a big one. The Australian property market, and I'm talking about the whole market. It has a track record of prices rising more than they fall over the long term. There are periods where they do fall, but the periods where they go up, prices go up, last longer, and the prices rise more than they fall in the corresponding downturns. Now, that's the whole of the market.
Yeah. And you can see that when you look at a graph, if you just Google, Australian property market or Australian median house price, you can see that over the long term, it continues to rise, even though there are some ups and downs. So what a property is worth now is above what it was worth 10 years ago, even if there've been some little blips along the way. So that's what we mean by they'll rise more than they fall over the long term.
And we're talking not a property, actually. Just want to be really super clear. This is
Yeah.
property plural.
Yeah.
The property market.
Yeah, and there's no one market. You guys know that we don't believe there's one market. But, both Domain and CoreLogic have released data showing that over the past 3 to 4 decades, so 30 to 40 years, upswing in property prices have lasted longer than downturns. So just what Veronica was saying earlier. And not only that, but the price gains during the upswings have been significantly higher than the losses during the downturns.
Right. So that's a general trend. And while we might see short-term dips, the long-term trajectory, which is a word that is quite hard to say, has always been upwards. So if history repeats like it tends to do, that's unlikely to change. But I just keep wanting to stress that's not individual properties, that's the whole market.
Yeah, the general direction. Now, number 2 is the gap to upgrade will widen as prices rise. Now, this is hard to wrap your head around, but stay with us on this one. And if you listen to our compound growth episode last week, you'll get a bit of an idea about why this happens. It's something that catches a lot of people off guard. So as prices rise, the gap between entry-level properties and upgrade properties actually gets bigger.
Yes, it does. So if your first home goes up in value by 10%, that's great. But if the home that you want to upgrade to also goes up by 10%, that dollar gap is bigger. Now, I know it's a bit simplistic to sort of say that properties go up at the same rate because we've already debunked that in the previous episode. But if you think, again, in general terms, if the whole market rises by a certain amount, properties that are more expensive are going to rise by a higher dollar amount than cheaper properties.
Yeah. And that means the longer you wait to upgrade, if it's really on your radar and you are in a stepping stone strategy and you've got a plan around that, the longer you wait to upgrade, the harder it can get, particularly if your income isn't increasing at the same pace as the change in the prices.
Yeah. All right. Number 3. This is the number 3 thing that we know will happen. Interest rates.
Our crystal balls. Maybe I needed a crystal ball in the background. What was I thinking?
I know you missed it. The 14 square meter apartment. You could have had could have had a disco ball. Even. Anyway, that's not really a crystal ball. All right.
Sorry about that, everyone. We don't.
Okay. Interest rates will fall. They'll rise.
Yep.
Then they'll fall again. If there's one thing that we can predict with absolute certainty is that interest rates move in cycles. It happens.
They're not linear forever. And we can look back and see that. We've just been through a major interest rate hike cycle. So up. Then they've been steady for a little while. Now, that feels a little bit comfortable. I know we'd all like them to go down at some point.
Yeah, that'd be helpful.
Yeah, they will. Can anyone really predict when that's going to happen? Probably not.
The people try.
They really try, but you should not base any of your major decision making on small interest rate moves.
Absolutely not, because, they will go down and then they'll go up again, as we just said. And, and I cast my mind back to times over how many years? I owned property now for 30 years. When I first bought, I've probably told you this story before, but when I first bought my first property, the memory of 17% interest rates that friends of mine had paid, and not that long earlier, was definitely in my head. And I was so excited to have locked half of my loan in at a rate of 9.85%. I was excited about that.
That would have been quite an achievement. And the fact that, if you do a bit of research and talk to experts in this space, you'll know that a fixed rate is sometimes an indicator of what the banks think that the interest rate is going to do. So if the fixed rate is lower than the variable rate, the banks are kind of thinking, we think that maybe interest rates will go down because they want it to work in their favour, not yours.
That's exactly right. And even back then, interest rates did fall whilst I had that half of my loan at that high fixed rate. It took me a few years, and then finally I could roll into a much lower variable rate.
So there's, you've really got to get good advice around that. And there is always risk. With anything, there's risk. Anything in property, there's risk.
Yeah. So the key takeaway,
Yeah.
don't make your property decisions based purely on today's interest rate. Plan for the long term and understand they're going to go up, they're going to go down. And,
absolutely.
and definitely don't. I tell you what, a lot of people are thinking, I'm going to wait till rates fall and then I'll buy. It's like, so is everybody else, right? Just make decisions.
Yeah. So
reasons.
And if you do that, Veronica, your point being that if you're waiting for interest rates to fall so that you can buy and everybody else gets in at the same time, then you're competing with a lot more people.
Yeah.
Which pushes up prices. Now, number 4 on our list, some property types and locations will just be duds.
I know, it's sad. Not all property is created equal. Some properties will not perform well. It doesn't matter what the market is doing. Some properties can lose money even when everyone else is making money.
Yeah, think about oversupplied apartments. There was years in Brisbane where house prices were really skyrocketing, but apartments weren't. Poor quality townhouses, properties in areas with no growth drivers. So buying well is really crucial. If you want a property that will hold its value and grow over time using that magical compounding growth formula we talked about last week in the last episode, location, land content and demand drivers, they really matter.
They do indeed. All right. Number 5, which is sort of harking back to last week's episode, is that compounding will still work. One thing that never changes.
Doesn't stop.
The magic of compound growth, right? The longer you hold a quality asset, the more you benefit. Property values don't just grow in straight lines. They compound over time.
And that's the beauty of the long-term nature of holding a property. And that's why it's important to buy well, right? So that asset selection, incredibly important, and then hold rather than trying to kind of time the market.
Yeah, absolutely. Number
6. Yep. First home buyer incentives will increase as prices rise.
You can bet your bottom dollar, right? Because political pressure to, inverted commas, fix affordability means that first home buyer incentives will likely keep increasing.
Yeah. But here's the thing, right? Governments need to balance helping first home buyers without upsetting the 11 million other property owners who vote. And, they don't want prices to fall.
Mm-hmm. So expect more grants, schemes and tax incentives, but don't expect them to fix affordability completely.
Yeah, most certainly not.
Number 7, economic forces and human behaviour is what drives prices.
Yeah, and people forget this, right? Property is simply people who are selling a property and people who are buying a property. The other factors, interest rates, all those sorts of things. It's actually the behaviour of the people who are buying and selling. It's the economic prices are determined by both those factors of human behaviour and economic forces, interest rates and so forth.
Yeah, so the way in which the direction of property prices is reactive, and it's reactive to the way humans react to all those other drivers.
Yeah.
And I'll give you a little example. When COVID hit and Chris Bates and I, we were doing a lot of Elephant in the Room episodes, interviewing experts as to what might happen and trying to look at precedents for massive, catastrophic events and, what happened to asset prices. And nobody knew. And there was a lot of predictions that the bottom was going to fall out of the property market, 30% price falls, all this sort of stuff. And I'm happy to say I posited this on the podcast. So it is recorded that I said this. And I'm like, I'm not sure. Because when people are locked up in their homes for months on end, are working there, they're schooling there, they're living, everything is in their homes. If those homes aren't big enough, if those homes aren't enjoyable to be in, they will be like greyhounds chasing a rabbit. As soon as you let that barrier comes up, they'll be out of the box the minute the lockdowns end, and they'll be running out there to buy bigger homes. And what happened? And so I can say, oh, yeah, I predicted it. It wasn't really about a prediction other than just knowing how humans react under certain conditions and knowing how people live in homes. And so that's really what then drove the massive boom we had in 2021, across the entire country as everybody went, that's it, I want more space.
Yeah, I did.
Human behaviour.
And I don't want to homeschool ever again.
I'm so lucky. My daughter was in year 8, or I was beyond it. I missed it. Yay. All right. So things like supply, demand, wages, and interest rates, these all matter, but so does buyer sentiment, fear of missing out, FOMO. That's a massive driver of the property market.
Yeah.
And also media influence. Again, how that makes people behave. And it's never just one thing driving the market. It's a combination of factors.
Absolutely. Now, number 8, the Australian market is not an Australian market. It's not one market. So although we sort of referred to that earlier, it was a generalisation to give you an idea of a concept. But there is no such thing as the Australian property market. It's actually made up of hundreds, if not thousands, of micro markets. Different cities, different suburbs, different streets, different side of the street, different house types, different layouts. You know, they all perform really differently.
Yeah. So don't get caught up in those broad headlines, even though we told you that generally over time prices rise. That is true. You need to research your specific market, you even drill down even further to researching specific properties in those specific markets. And that's really going to help you turbocharge your gains or your wealth, if you want to call it that, from property and your results in property. Number 9, you can make money in a falling market. I know this sounds ridiculous. You don't have to wait for a booming market to make money in property. If you buy well, if you can add value, or if you pick the right asset, you can still come out ahead.
Yeah. The reverse is also true, Veronica.
Ooh, yes.
Yes. Number 10 of what we know is that some people will lose money in a rising market, right? It sounds counterintuitive, but it is true. Just because the market, and I say that, you know, in inverted commas, just because the market's going up doesn't mean everybody wins. You know, some people will buy the wrong property. They'll overpay. They might overcapitalise. They may make poor decisions about how they're going to renovate the property. So a rising market actually doesn't guarantee an increase in value, even if overall the market is increasing.
That's exactly right. And in fact, just give 2 really sort of clear examples. You talked earlier about what happened to Brisbane apartment prices over a period of over a decade, really, when nothing happened. The same thing happened there was a boom in Melbourne and Sydney, sort of roughly around 2012, 2017. And in that time, in that boom, a huge proportion of apartment owners in Melbourne sold for a loss whilst house prices were going up. So you got a boom, you've got a bunch of property owners, and some of them are losing money and the rest are making heaps of money. And likewise, over the 10 years when Perth property prices were in free fall for parts of it or doing absolutely nothing, you know, you could have bought in other capital cities and been making huge gain. In fact, over that time, that 5-year boom, Sydney prices, the median price went up 89%. Perth did nothing. So if you're in Sydney, your house went up or whatever, you know, assuming everything goes up the same value, which we know it doesn't, but let's just say it went up to the median, it went up 89%, and in Perth, you would have had no gain whatsoever. So these sorts of things can happen, and that's the reality of the property market.
And that's why having research, good advice, and choosing your asset really carefully can mean the difference between number 10, where you might lose money, and number 9, where you might make money.
Exactly. And it's really important to know we can't control the market. Not one of us can control it. And that's why we have to make decisions based on our requirements. Number 11, the thing that we know that will continue in the future is that headlines will continue to be unreliable. If you take one thing from us today, do not trust property headlines. Yeah. You know, the media will always publish the most extreme predictions, whether it's a 40% crash or a 30% boom. And that's because it's clickbait. As we all know this, you know, they're selling advertising space and they need eyeballs. And so if you go, property market's probably going to continue this year the same as it did last year, why would you click?
Yeah, there's nothing interesting. There's no controversial aspect to that.
Nothing. And forecasters, you know, I've co-authored a report for 5 years called the Fool or Forecaster Report, and they are wrong more than 80% of the time most years.
There you go.
So, you know, like you're basing your decisions on what property experts say, and they've got a shocking track record.
Yeah. I think the very first commentary article I wrote for a newspaper back when people read newspapers was an article called Lies, Damn Lies and Statistics. And it really sort of went into depth of you can take a statistic and turn it either into a very positive news article or a very negative news article. And the exact same press release about a statistic or a prediction can be used in the same publication to support opposite sides of an argument. So, you really need to sort of step back a little bit and say, what is this information? Is it useful to me? And should I be using it? Or should I dig into the fundamentals and have a little bit more of a closer look at what I'm doing? So rather than obsessing over timing the market, focus on buying the right property.
100%. Do you know, I read a book, Kent Lardner actually recommended this book to me many, many years ago. It was written in 1954, but it was fantastic. It's called How to Lie with Statistics. It taught me so much about exactly what you're talking about there, Meighan. And I'm reading a book at the moment, and it's called Factfulness. And it's the same idea. It's really about, how data is sort of manipulated in certain ways and how our understanding and our critical thinking is sort of with our information overwhelm that we're getting in the world just generally, it's too hard to try to work stuff out. So you sort of got to get your antennas finely tuned. You've got to start to learn about, hang on a minute, to question things and to drill down more. And that's why, back to the headlines, they're not encouraging that. They're encouraging some really level 2 thinking, which is pretty lazy. And so don't fall for it. All right. If we had a crystal ball, what would it say?
Look, I think that it will probably say, buy the right property, right in the right location, hold it for the long term and ignore the noise. Listen to advisors who have your interests and your interests only at heart.
There will be ups and downs, but if you focus on quality and you really make a careful decision at the outset and you trust that you did that and for all the right reasons, let it go because you'll be in the best possible position.
Absolutely. Now, have you joined our Facebook group yet? Many have, and they are enjoying talking to us directly. It's called Your First Home Buyer Guide Australia, and it's your opportunity to connect with us and ask us your questions. You'll get answers from us, which means that you can be sure that you're not getting led down the garden path.
Yes, and in fact, just today, because we did say we got over a certain threshold of members that we'd start holding some live Q&As. So just put a post in there, a poll in there, asking for votes on 5 topics, which one is the most pressing, and we can look at doing a Q&A on that. So if you want to be part of this, you need to get on board and join the group. All right, quick note. You might think that we cover everything that we need to know in these podcasts. So word of warning, we don't just scratch the surface. That's all we're able to do in a podcast. If you really want to be an educated first home buyer, you need to learn all of the steps and how to do it. I can't stress this enough, in the right order.
And with your own unique needs in mind. I think that's the other thing that you probably need to add in here. It's doing it in the right order, but with you and your needs and your situation at the forefront. Your First Home Buyer Guide course only costs $990. You get direct access to us to help guide you through your negotiations. You can also share a link of any property you're thinking of buying, and we'll help you work out whether it's A, B, C grade or an absolute no-go zone. Trust me, you'll buy a lot better with our guidance, and you'll overpay by a lot more than $999. $990?
$990.
$999. $990. If you don't know what you're doing.
In this episode, we've only touched on a tiny part of the huge amount of things you need to know to become an educated first home buyer. There is so much more for you to do. You can learn all of the steps in the right order and avoid all of the mistakes that others have made in our 10-step online course for first home buyers.
If you'd like to learn more about the right process and avoid making rookie errors, become an educated home buyer. Head over to the website, check out Your First Home Buyer Guide, the course that we have created for you. And don't forget to subscribe to the podcast so you won't miss an episode. And if you've liked what you've heard today, please give us an iTunes review. It helps other people find us. And of course, I know it's a bit cringy, but we're going to ask for 5 stars. Thank you.
Thanks for joining us. We hope you found this really useful. And if you have, please share the love with others who you know are in the same boat. We'll be back next week with more priceless stuff.